Hello and welcome back to the Learning Crypto YouTube channel. In this video, we're featuring Fetchai or FET, taking a look at some potential buy areas and TP areas for the upcoming bull run in both USDT and BTC pairs. But before that, a big thanks to our sponsors at Blofin Exchange, who are currently offering a $30 futures bonus to the first 200 signups before the 8th of Feb, and an exclusive offer of 15% cashback on deposits up to 500 USDT back to your account, but only if you use our link in the description below. And on top of that, today is the start of their trading tournament, which has a top prize of 50,000 USDT, and it runs until February the 20th. So no KYC requirements, and it is open to UK users. So be sure to check that out and use our link in the description below. And of course, if you enjoy our content, please do like and subscribe to the channel. It helps us grow. We really do appreciate it. And it helps you not to miss out on future uploads. So with that all out of the way, let's take a look at the chart. So starting off with the USDT pair. And as you can see, the AI narrative, quite a strong one in this cycle so far. In fact, FET actually bottomed out before a lot of other altcoins, bottomed out back in the end of November 22, basically when Bitcoin did, and it actually made a higher low when a lot of other altcoins made lower lows back in the summer of last year. So pretty strong performer, still got a little way to go before all-time highs. And as you can see, we are currently trading above this very important weekly level here at about 46 cents, and we're currently at 52 cents. So holding this level for now, which is good. A break below that could be pretty bearish. That makes this all one big deviation, and maybe we go lower. However, I'm pretty sure that we will continue to hold this level, and be in for another leg up as the year goes on. So let's take a quick look at the fib retracement tool, and you can also see, and you can actually see, if we zoom in, if we take it from the bottom of this rally down at 20 cents and take it to the top of the rally at 80 cents, we are coming up to that 0.5 level, and the 618 is down here at 46 cents, just below the weekly level, at 42 cents, just below that weekly level at 46 cents. So what we could see is a nice little wick down to tag that 618 level, hold the weekly level 46 cents, and then go from there. Maybe some sort of double bottom here, and then go off on another run. So anywhere between here at 52 cents and down towards 42, 43 cents, I think is a really great area for dollar cost averaging in. Whether you've already got a position from lower, or you've not seen this asset before and you're interested, as I say, anywhere between here and 42 cents, I think looks like a really good area to start dollar cost averaging into. So with that being the case, let's take a look at some potential TP areas where I'd be looking to take some profit if we were to start making our way up from there. And the first one would be this level up here at about 72 cents. So this was pretty much the top from the most recent rally that topped out at the end of last year. You can see we had wicks up to about 78, 79 cents, but no candle body closes above 70 cents. It's also been a strong level in the past. There's resistance back here in March at 2021. Flip to support back here in September and October and November 2021 before being lost as support in November 2021, and that's when we made our way down to the bottom. So as you can imagine, a very strong level of resistance, hence why it held up at the end of last year. So I'd be looking to potentially take some profit there. From today's prices back up to there, you are looking at about 35, 36, 37% return, which is not too bad, although I can understand if people buying in from here and maybe a little bit low. If we went back down to that weekly level, it would be about 54%. See why you wouldn't want to take profits there and hold on for future TPs. First one for me being at 90 cents, anywhere between sort of 90 and 92 cents. Again, it was the highest weekly candle close we got, which was back in November 2021. Whilst we got a few spikes above that level, we never got any weekly candle closes above it. So a very tough level of resistance, in my opinion. And it's basically the range high of the trading range we were in between September and November 2021. As you can see, just bouncing between this first TP area that I pointed out, which was support, and this TP2, which would obviously be resistance. So I think we could definitely see some profit taken here at around 92 cents. So a return from today's prices up to there is about 75%. And if we were to get that retracement down to the weekly level 46 cents, that then becomes doubling your money at a 100% return. So again, pretty good TP area there, and front running that dollar level slightly. And then finally, the last TP is, of course, the absolute all-time highs here at about $1.19. So again, let's take a look at what a return to those prices from today would be. About 125%, pretty decent. And then if we were to retrace down to this level of 46 cents, that increases up to about 157%. So let's take a quick look, because as I say, we're only about 125% away from those all-time highs, which in any other market is pretty decent returns. You certainly wouldn't stick your nose up it. However, crypto, we like a little bit more than that. So let's take a look at what some potential higher TPs could be if we take a look at the fib extension. So here's what I did earlier. Basically, take it from the top down to the all-time lows, and you get these extensions. I've got the 1.236 and the 1.618, and they actually come in at really good price areas as well. This 1.236 comes in just below $1.50, so a bit of a psychological level. It's at about $1.47, so front run that slightly. And if you take a look, a return from today's price up to there, 175%, not a bad return at all. And then finally up at the 1.618, again, you got that $2 psychological level just above the 1.618 coming in about $1.90. So again, pretty smart place to take some profits in my personal opinion. And that would be a return from today's prices of 256%. So not bad at all. So as I say, anywhere between here and this weekly level of 46 cents, I think is a really good dollar cost averaging opportunity. So with that out of the way, let's take a look at the BTC pair side of things. And if we zoom out on the weekly time frame, you can see we are in one big range. So weekly range high here at 2000-ish sats, weekly range low at 193 sats, and the weekly mid range coming in about 1117 sats. And it's been a pretty decent level of support and resistance, as you can see throughout its history. So first of all, let's take a look. Obviously, what we'd ideally like to see is a hold of this weekly mid range and support, as we did back in November and December last year. Rally up, break the weekly range high, which we've had 2 attempts at so far, and no bueno. However, third attempt, maybe we smash through and start attacking some of these these previous highs. If not, we could drop lower. So if we just whack a fib, again, this is one I did earlier. If we just take a look, we're currently heading towards that 618 level at about 1152 sats, just above the weekly mid-range, which is also support. And if we dropped a little bit lower, the 786 coming in at just under 1000 sats, about 960 odd, and that's also a nice level of weekly support. So anywhere between here and about 950 sats, I think is really good dollar cost averaging opportunity. As I say, we've got the 618 as support, the weekly mid-range as support, that $1,000 psychological level of support, and the 786 here at 960 sats. So I think that's a really good area to be dollar cost averaging into. Of course, if you've done your research and you like the project, not financial advice, all that good stuff. So let's take a look at some potential TP areas should we turn things around and start heading up. So first TP, you could consider taking some profits here at the weekly range high. However, I think personally, the next attempt of breaking out of this weekly range high should be the one. So you might not want to take profits there. But again, if you're trading between an altcoin and Bitcoin, you can't really lose out. So nothing wrong with taking a bit of profits at those weekly range high. That's a 63% return from today's prices. But beyond that, first TP range would be anywhere between, I'd say, 2,700 sats and 3,000 sats. Again, probably want to front run that 3,000 sat psychological level, but you can see it was big resistance back here in May and June 2019. So let's take a look at what a return from these prices would be. About 135%, which again, 135% return on your Bitcoin, not a bad return at all. And then the next one being up here at around 4,500 sats. Again, a little bit of resistance here where we had a rally in April 2019 and then hit that resistance and came back down. So again, probably a heavy selling area once we get out of this weekly range. And again, that's a 270% return on your Bitcoin, which is not too bad at all. Now, finally, let's take another look at some fib extensions for some slightly higher slightly higher prices. Again, we don't know if the AI narrative is going to continue to run throughout the cycle. Likely it will, and who knows, maybe certain alts, particularly those with a strong narrative, run very well against Bitcoin. And if that is the case, maybe we see some of these higher valuations. So the 1.236 coming in at about 5,700 sats. So let's take a look at what a return from today's prices look like. That's 350%. And then finally, the 1.618 coming in at a massive 7,500 sats. It's not like it hasn't been there before, although it was on the way down back when it was launched back in 2019. Let's take a look at what a return to that would be. A 500% return on your Bitcoin. So as I've said in many of these videos, the risk to reward is definitely there. We're definitely closer to the bottom than we are the top. And so when it comes to the bull market, you want to have your plans on taking profits. Remember, taking profits gives you options. You know, you can either just withdraw it to your bank, buy something nice, put it aside for taxes, or diversify into other projects as a free bag because it's all with profits. And of course, as I just said, when you're trading in between Bitcoin and altcoins, you can't really lose out. And of course, having that plan in place before you go into the bull market of where those profit taking zones are means you're not going to fall victim to the emotional, the emotional confusion of a bull market. So have a plan in place. Doesn't matter where you take those profits or how much you take. Just take some. Again, whether you use technical analysis to use your TP areas, or whether you do it on psychological levels, i.e. if we go back to the USDT chart, you know, whether you take some at $1, $1.50, $2, etc., or whether you want to do it based on what your buying area is. So maybe you've got an average buy in here. So you buy in here, average buying of 50 cents. Maybe you want to take some profits, at 75 cents, $1, $1.25, $1.50, etc. So completely up to you. Just have a plan and stick to it. So hope you enjoyed the video, and I'll catch you on the next one.